issues a buy call on Ultratech, Dalmia Bharat and Ramco Cements. Also raises the target price for Shree Cements. Hello and welcome to Markets Forward, the show where we aim to get you all the key data points to gear up for the next trading session. I'm Surabhi Upadhyay and with me is Prashant Nair. What a day, Prashant. Is it really the end of the year?
2 days more, Surabhi. And, absolutely astounding, right? In terms of what we saw today. And I think, just to take a quick look at what happened, if you saw the market at about 1 o'clock, you would have thought that we are going to end with about a 0.5% kind of a gain. But by 3:30, it's a full 200-point recovery that we had. So the Nifty hit a new all-time high, the Nifty Bank hit a new all-time high, the sensex hit a all-time high as well. Just quite incredible. And you would have thought that volumes are lower and participation is a little lower, etc. But there's the other side to it. When participation is lower, and we'll confirm these figures in terms of how they stack up compared to the average, if that is truly the case, then price moves do seem a little exaggerated. So I think that also was perhaps a factor. PSU banks, metals and autos were some of the top gaining sectors that we had. I think the institutional flow figure that we'll get today later in the day, which is FII and mutual fund numbers, I think that'll be interesting because it's a big gain. So is it backed up by significant cash market activity or not? I think that will give us some clues as we sort of come back tomorrow. But can't take away from the fact there has really been just a very shallow one-day fall and then back to new highs once again. Surabhi.
Oh yes, absolutely, absolutely phenomenal, stupendous day.
Yeah.
And the big theme was really catch up, and this is what a lot of people in the market have been calling for: large caps to play catch up, given that small caps and mid caps have rallied over 50% this year already, and that's exactly what played out today. By the way, we also had lots of support from global markets, the markets that were resuming after the Christmas break, whether it's Asia, you had Australia come back, even mainland China, Hong Kong, all these markets had gains to clock today. So that was good news. And Europe also added to the party, to the cheer, when those markets opened out. So the records, for the sake of just housekeeping, the Nifty's new all-time high is 21,673. And the Sensex flying past 72,000, with the new high there being 72,110. Auto stocks, metal stocks strong, but really the story was about banks, and we'll talk about that. Not just PSU banks today, even private sector banking names were up and about. Your Axis, HDFC Bank, Kotak, all of these names, they've been missing in action for the past many, many months, but today they stood up and got counted. Mid-caps, yes, so relatively speaking, there was underperformance. The index was looking at a gain of less than 0.5% today, but individual names, there were plenty of high flyers, and we will get to that in just a bit. In fact, let's actually run you through what we have lined up over the next 20-odd minutes. Here's what we will cover. We'll start off with the top movers of the day. Vivek will fill us in on all the action. The buzzing sector of the day was cement. Stocks like Ultratech Cement, Ramco Cement were all gaining on the back of that note that came in from Nomura. Nimesh will give us the highlights and talk about some of the target price increases that Nomura has put out. Then CNBC-TV18's popular segment D Street Chatter, of course, comes in as usual. And Nimesh today tells us why IEX was buzzing in the trading session. Last but not the least, we will deep dive into the key market events to watch out for tomorrow's trading session. So lots lined up.
Absolutely. Well, let's just dive straight in. What are the big stocks which moved? And there was a lot happening. Vivek is standing by on the big wall with exactly that. Vivek, the movers and shakers.
Well, absolutely. We cannot go by today's day, without alluding to the kind of moves that the entire cement pack saw. So cement, while we will talk about why they moved and, about the upgrades that did come in, but have a look at some of the names, Ultratech, Dalmia, Ramco, Ultratech crossing a crucial market cap figure as well. Also keep an eye out for Kesoram Industries. Remember, it will now move in tandem with Ultratech, given that, the share swap agreement is in place. And also Nuvoco Vistas, even the mid-cap as well as large-cap cements doing very well in the session today. The next stock on our radar, one that we don't talk about too often, and one that doesn't see large volumes or large moves, 3M India, today the top gainer as far as the Nifty 500 is concerned. Very, very sharp up, almost 15% higher today. The third stock on our radar, Alchem Labs, an initiating coverage report coming in from Equitas, target price quite steep. Stock moving higher on the back of that. The next stock, Godrej Consumer, again, a brokerage upgrade coming in over there. ICICI Securities went ahead and upgraded the stock. Cooled off a little bit in the last 15 minutes, but still was on among the top movers today. The next stock that we're talking about is J. Kumar Infra. Yesterday we spoke about the stock, CLSA hiked the target price with a buy rating, and today you did see a significant fall on buying, again 5% higher even in today's trading session. BBTC, Bombay Burma, yesterday the stock was at the upper socket. Even today, the stock spiked in the last hour, almost 4% higher. But on the other hand, some of the stocks, especially when you're talking about a listing today, IPO market has been quite hot. But Motis and Jewellers, quite a muted listing, down 5%. And even JSW Infra today, after a while, the company announced to the exchanges that it had completed the acquisition of PNP Maritime. But after that, a little bit of cooling off was seen. Other than that, most of the stocks actually did see green on the screen.
Okay, all right, Vivek, thank you very much for pointing out all the big movers and shakers of the day. Let's bring in our guest to talk about some of these big moves. We have Nagaraj Shetti, who looks at technicals in the market. He is joining in from HDFC Securities, and we have market expert Prakash Diwan with us as well. Gentlemen, thank you very much for joining in. Nagaraj, let me come to you first. For a lot of people, I think they've been waiting for that dip to get in and start fresh long positions. But that dip was completely elusive. In fact, even if you bought at the first all-time high, which happened in the first half of the day, you would have still made money by the end of the trading session. So how do you navigate the market now, the next two trading sessions?
Hi, good afternoon, Sabhi. Nifty has been in a sharp uptrend, no doubt about that. We have seen continuous upside momentum over the last 4 sessions. We have seen intraday dips in between, and Nifty has taken out that resistance easily. Now we have seen Nifty clearly breaking above the immediate resistance of around 21,650, 600 odd levels, and I'm expecting this to be taken out and Nifty to move up further. On the decisive up move of 21,650, 21,700 levels, we are likely to see Nifty reaching towards 22,000 and 22,200 levels, which is going to be the next upside target as per Fibonacci extension. On the lower side, immediate supports are placed around 21,300. Any consolidation, any dips from here is expected to be a buy on dips opportunity.
Good afternoon. Thanks for joining in. Prakash, what's your projection from here?
No, I have no predictions. I just kind of sit on the ringside and enjoy the ride. Interestingly, if you're talking about numbers, Prashant, at the current new highs of the Nifty, and let's say 22,000 also is it's a matter of time. Maybe the first week of Jan, you'll see some of those days when that also kind of gets breached. What are we talking about from a price earning multiple on the Nifty? I mean, you still don't have estimates that have been revised. I mean, it's still about 1070, 1080 on earnings for the Nifty. So we're already in a zone where the Nifty is no more at 18, 19 times FY24. It's probably more. Now, there could be a justification that given the, almost certainty in expectations being built for a continuity of this government or, a similar disposition of the government, you could probably see earnings start moving up from FY25 onwards. Now, that is a big hypothesis, and it's not that can not happen, but, the market is getting much and more vulnerable from a valuation perspective. I don't know what can cause the trigger to kind of see some sort of a sell-off. But the sell-off will probably be sharp and it'll probably be far more difficult for people to digest. So, these dips are fine. People buy into dips, things move on. You forget about what valuation you're buying at because it's momentum that takes over your thought process. But if the dip continues to be deeper, then, it's a difficult time for people to come in and then people actually move back. So I'm sensing that could happen. I don't know when it happens, but probably when that happens, you'll probably start seeing a little bit of a more realistic picture emerge in terms of where there's pockets of value, there's pocket of promise from an earning perspective.
Okay.
To be fair though, Prakash, I think at this point, people will start looking at FY25 numbers, right? I mean, actually FY25 is the year forward, and then now, of course, people are talking about based on FY26 numbers. But 25 is par for the course, a year forward.
No, I agree. I'm not saying, but I'm just saying, so the Nifty is already gone into that band where it's a bit expensive. And it just keeps on getting more expensive.
It's no longer at whatever 18, 19 times or so. It's certainly more than that now. Point taken. Now, cement stocks were soared in today's trading session. Ultratech was the big gainer. By the end of it, Ultratech, the largest cement company, was up almost 4.5%. There was a note from Nomura earlier. Nimesh is here, just highlighting what Nomura is making in the cement space and where you can make money in that pack. Nimesh, over to you.
Hi, Prashant. So Nagaraj is extremely bullish on the cement in the entire cement sector, and today they've upgraded some of the cement stocks as well. So they've upgraded Ultratech Cement to a buy from neutral. There they've raised a target price to 11,500. They also upgraded Dalmia Bharat to a buy. There they've raised a target price to 2,900, and they've upgraded Ramco Cements to a buy as well, and there they have a target price of 1,250. They also have a buy rating on Shree Cement, but then Shree Cement, they've sharply raised the target price now to 33,400. Now, why they are bullish on cement sector? Nomura believes that the upward momentum, both in terms of volumes and pricing, is likely to continue. They see margins to get expanded on the back of strong volume growth, pricing discipline from the industry players, as well as lower fuel costs. In fact, for the second half of this year, they expect the volume growth to continue for most of the cement names. In fact, for FY25 and FY26, they expect the volume growth to be higher than what we saw in the entire last decade. That's the kind of volume growth you're going to see for the industry per se. Even in terms of pricing, once the industry exits the pre-election phase, you're going to see a pricing improvement as well. So on back of all this, they've raised the earnings sharply for the cement names and sharply raised the target price for most of the cement stocks, and have upgraded Ultratech, Ramco Cements, and Dalmia Cement to buy now from neutral earlier.
Okay, got that. Nimesh, thanks very much. I will come back to you for all the D-Street chatter in a bit. But Nagaraj, let me ask you, actually material stocks overall, today it was metals and cement. Largely speaking, commodities and materials did very well in the market today. Do you see anything interesting on the charts, any trades that you would suggest here?
Yeah, of course. So many sectors are moving up along with this upside momentum in the market. I have two picks from different sectors. First one, Hudco, and second one is Sharda Crop. If you look at the chart, the pattern of Hudco, it has been a continuous uptrend over the last many months. Higher top, higher bottoms, as per the long-term charts, indicate that this stock is in a phenomenal uptrend. Recently, we have seen minor dips in that, and after that, in today's session, it has witnessed a sharp upside bounce and closed with a gain of 9%. I'm expecting this to move up further and currently close around 115 levels. One can buy this stock around 115 or around 115, and upside target would be around 123. One can place a stop loss at 110 levels. Second is Sharda Cropchem. Sharda Cropchem was the underdog and recently was into a consolidation. And it has made an attempt of upside breakout of the consolidation in today's session and closed around 455 levels. The overall chart pattern is looking bullish. Volume has expanded during upside breakout, and RSI shows positive indication. I'm expecting this upside momentum to continue for at least for short term. One can buy Sharda Cropchem around. The target would be around 495, and 430 would be the stop loss for the near term.
Okay, all right. I just want to bring in one more sort of name. This is Bajaj Finance. Not the stock, shot up or sold off or anything of that sort. But the fact is, Bajaj Finance is one of the only names now which in the Nifty which remains, lower than where it was last Wednesday. So in that sense, it pays to sort of look at this a little more closely. The RBI granted a one-year extension to Bajaj Finance and RBL Bank's credit card partnership. The extension was, of course, the expectation was for a longer extension. Brokerages like Morgan Kotak have noted the same. And of course, my colleague Vivek sort of talked about and brought you the story yesterday. But where do viewers stand? There are those who say that this is not going to have a material impact. There are others who say this is material. Vivek is here once again to wrap that up for us. Vivek, over to you.
Well, absolutely. So yesterday we told you about how the RBI had cracked the whip as far as Bajaj Finance's adherence to norms was concerned in terms of the regulations that the RBI had set up. And this was regarding, the co-branded credit card partnership that Bajaj Finance and RBL Bank have. So October 27th, Bajaj Finance had written to RBI asking for an extension for the same. The extension asked for was much more than 1 year, but RBI, in a letter that we accessed said that, this particular extension is only for 1 year. And the language used, was quite strong in terms of wrapping up Bajaj Finance on the knuckles in terms of not being able to adhere to the practices. On the back of that, 2 brokerages today have taken note of this particular development. First up, Morgan Stanley. Morgan Stanley writes that in their view, prima facie serious deficiencies and a 1-year extension don't really tie up. They say that Bajaj Finance still has 1 year to go ahead and make up for all of the lost material, and also in terms of adhering to the RBI norms. They're saying near-term operations should continue as usual, and unlikely there is going to be a material impact on earnings. But on the other hand, Kotak Institutional Equities, are taking it slightly more seriously. What they're saying is that this is in fact the 3rd development in recent times that shows that Bajaj Finance may have to go ahead and tweak lower its high loan growth rates that it has, and also the high loan growth targets that it's kept for itself in FY24. They are watchful of Bajaj's loan growth commentary in forthcoming results. They've also gone ahead and tweaked their loan growth estimates. They believe that going forward, Bajaj Finance, especially now that it is in the eye of the regulator, remember just 2 months back, they had asked Bajaj Finance to stop sanction as well as disbursements of the e-com as well as the Insta EMI card. So some negative news flow coming in for Bajaj Finance, but we'll need to watch out for, given the fact that so far there has not been any update to the exchanges from both of the companies.
That is true, and I guess Morgan makes a strong case there, saying that if the omissions were that grave, then why would the RBI give even a 1-year extension to this co-branded card? Vivek, thank you very much. Let's put that question to Prakash. Prakash, now, Bajaj Finance is one stock that hasn't moved much. So if someone's looking to buy stocks that are not red hot, maybe Bajaj Finance makes the cut. But then there are a lot of fundamental reasons here, right? A lot of regulatory issues that the company has been surrounded by in 2023. Would you be a buyer?
No, not at all. Not just for these reasons, Survi, but it's a significant stretch on valuations as well. I mean, it always has been trading very richly. The challenge now is, given its size, and I'm not saying it can't continue to grow. It will continue to grow given its clout. But given its size, RBI, the regulators will always be very circumspect given the implication or as a systemic risk if something goes wrong with this company of this size, right? So, size also begets a lot of problems, while it solves a lot of problems for companies. So I'm from the camp that believes that Bajaj Finance is great in the long run, but the only time you buy this is when there's blood on the streets, when there's some sell-off which is happening not just in Bajaj Finance but across the board. And remember, it's one of the most owned NBFCs, large cap NBFCs. So for any FI inflow and outflow kind of dynamics, it will give you those kind of entry points as well. I think the smaller NBFCs which have a more going for those companies, while there's this whole shakeout that's happening from cost of funds issues or regulatory overhang in terms of the norms that have changed, weightages and all. But I believe there's still a lot of opportunity available there. I would look at that. Maybe we could discuss some of the stocks in that space, but not Bajaj Finance at this point.
Okay, all right, gentlemen, we'll leave it there for now. Prakash and Nagaraj, appreciate your time here on Markets Forward. Thanks very much for joining us today. Well, it's time for to note some important corporate commentary that we got through the course of the day. Now, the first one was Max Estates, which is a leading real estate player in the Delhi NCR region. They've got residential projects, they've got commercial projects as well. We spoke with Rishi Raj, Chief Operating Officer of the company, who says that they're planning to acquire, more, to basically capture more residential opportunities. They're, of course, also in the process of leasing out some commercial development, which has happened. Their overall kind of guidance is for a 15% growth in booking value on a year-on-year basis from here.
Okay, let's move on and talk about another company. Manoj Verma, COO of Bikaji Foods International, says that the company is targeting 18% of volume growth and EBITDA margins in the range of 13 to 14% for the current fiscal. Finally, RailTel has surged over 130% in 2023. Sanjay Kumar, Chairman and Managing Director of the company, told CNBC-TV18 earlier today that signaling opportunity itself is worth about 1 lakh crore rupees, out of which 15,000 crores could be expected to come through over the next 1 to 2 years. Okay, with that, let's quickly head back to Nimesh for all the chatter from the street, D-Street chatter as the segment is called. Nimesh, what did you hear today with the market taking out many more records today?
Oh, absolutely. Record highs for the market, and especially in the last 1 hour of trade, we saw a big move in the Nifty, largely led by the large cap names. But in terms of individual stocks, the trend of large blocks continues. I'll highlight some of them. The first one was Swan Energy, 1% equity got changed hands. Looks like the promoter was a seller there. The second was Themis, 4.5% equity got changed hands there as well. So disclosures could be interesting. And also IQ Lighting, where there was a 1% block as well. The second name was Tata Motors. After a long time, some bit of buying interest seems to be back in Tata Motors. Expect high delivery volumes, and some bit of FI interest is also back in that particular stock. The third name is IEX. There was a market at close basket buying in some mid-cap names, and IEX stands out on back of that. So there was a high delivery volume in IEX as well in today's trade. And the last one is Crompton Consumers. For the second day running, some bit of institutional selling seems to be quite active there. So expect high delivery volumes, but on the sell side in Crompton Consumers for the second day running.
All right, Dinesh, thanks very much for that. Well, that's D-Street chatter and stocks to watch out for from here. What are the big events lined up? I'm sure there is a listing or two tomorrow as well. Sonal is here with that. Sonal.
Well, there's always a listing nowadays, right? But let me talk about the other events. There's an extraordinary general meeting for some of the companies. We have Ganesh Benzoplast, which will have an EGM tomorrow, and so will Franklin Industries. There's an investor day for Bector's Foods, so we'll watch out for that one. That stock has been in focus of late. As you said, there's a listing tomorrow, Azad Engineering. So those are some stocks that will be on our radar. Let's talk about some macros now. In terms of economic data in Japan, we have the industrial output, the retail sales for the month of November, which will tell us what's happening with the economy. For Hong Kong, the trade data for the month of November will be out. Turkish Central Bank minutes will be out as well. There's been a lot of inflation and rate hikes happening there, so that is something we'll be watching out for. And RBI will also be releasing the financial stability report. So some updates from there will be important to watch.
All right, Sonal, thanks very much for that. So that's basically a look ahead, a peek into what's lined up tomorrow. It's a wrap on this edition of Markets Forward. I hope that sets you up as you come back tomorrow after what has been an absolutely spectacular another 200-point day. From Surabhi, me, everyone on the team, it's goodbye. Thanks for watching. News and updates follow on the other side.
CNBC-TV18, embarking on a quarter century of excellence.